A popular crypto TikToker, known as Crypto Wendy O, made some comments about the current situation in the crypto industry. According to her, the level of volatility in the crypto market is simply par for the crypto course. She said, "Crypto is very volatile. We are going to have a nasty downturn. And that's okay. People get confused and think, oh, I'm going to have massive gains all the time. But that's not the way things work. Because we have volatile massive gains, we're also going to have volatile massive downturns." With the string of events that has happened in the crypto market, many investors have doubted the safety of cryptocurrencies. Much of crypto did graze the markets at the start of 2022 when enthusiasm was high, but a few months later, the worst nightmare happened and it all came crashing down. Bitcoin's value is roughly a fourth of what it was a year ago, and industry is just starting to pick up the pieces and grapple with the fallout of the tragic implosion of the crypto exchange FTX. In the future, 2022 will be recorded in the history books and regarded as a turning point for the world of virtual currencies, where they lost their luster and were cast out as a fringe product. Most people approached them with skepticism and caution. Perhaps it will be simply remembered as a stretch of excruciating pains for an industry still in its infancy. Back then, the ads were everywhere, and crypto companies spent tens of millions of dollars on marketing, swamping the Super Bowl with commercials. The currencies and tokens may have been virtual, but crypto became real for many Americans. The industry seemed to reach the peak height because prices had hit an all-time high and people were making irrational amounts of money. The value of Bitcoin had just set a record and the industry was trying to mainstream itself, according to Molly White, a fellow at Harvard University who is a crypto skeptic. Meanwhile, many crypto companies were doing all that they could to bring in more customers. Just like everything else in finance, crypto saw its prices tank when the Federal Reserve started to increase interest rates to combat high inflation. This came as a shock to many of Bitcoin's supporters, many of whom believed the virtual currency would be an inflation hedge, like gold. They had forecasted that Bitcoin's value would rise during a period of high inflation, and unfortunately, it was falling. The recent crypto winter began before 2022 even reached its halfway point. An expert who teaches cryptocurrency law at Duke University said, "We've been living in the crypto winter for the better part of the year. Investors have been hurt, especially people who got caught up in the hype and bought the digital asset near the highs. The crypto winter also revealed larger systemic problems in the crypto industry. It exposed several crypto firms that were overextended, had poor risk management, or otherwise were engaging in fraudulent activity. A thread of failure started in May with the downfall of a pair of cryptocurrencies called Terra and Luna, the trading platform Voyager, a crypto hedge fund called 3 Arrows Capital, BlockFi, Celsius, and the list goes on and on." An expert noted, "These firms are deeply interconnected, and so the moment you kind of have one problem somewhere in the crypto sector, it spreads very, very quickly." Financial regulators started to crack down as well. For many, it's devastating to see how quickly crypto's fortunes are reversed, and they are struggling to gauge the depth of the damage from FTX. Nevertheless, true believers expect Bitcoin to bounce back, and the crypto will thaw eventually. However, for people who are not deep into the world of crypto, perhaps they saw an ad or were driven by the fear of missing out on a dabble in buying tokens, it's a different story, especially with daily unraveling from Bankman-Fried's former co-workers about how customer money was allegedly moved out of FTX into their own pockets. It is indeed a different story, and many people are starting to think crypto as a big scam, and that they don't want anything to do with it. As a result, this poses an existential problem for crypto, because for it to work, it needs an extremely large stream of people to keep buying it. According to some, price dips can also serve as an opportunity to buy more of a coin that one believes will perform well in the future. Founder of Girl Gone Crypto, Leah Thompson, said, "I'm really interested in projects that I think will have a lot more value long term than where they are currently. For me, those are Bitcoin and Ethereum. If you are slipping an NFT or trying to get a great return of some other altcoin, there's a lot of potentials to be made. But if something is really valuable in the long term, then those market dips are more of an opportunity to accumulate more of something that's really scary." Moreover, with everything going on right now, understanding the long-term value of any type of investment is crucial. Crypto is a long-term gain. When you understand the underlying principles of why you should believe in crypto investments, it makes it a lot easier to thrive, even with the turbulent waves. Furthermore, the CEO of ARK Invest, Cathie Wood, posted a thread on her Twitter handle to comment on the instability of the banking system that has shown its ugly head recently. She pointed out that the two leading cryptocurrencies rose in price with that move. Elon Musk, tech billionaire and boss at Twitter currently, joined the discussion in the comments. Cathie Wood stated that while the US banking system seized up, two major cryptos, Bitcoin and Ethereum, as well as other digital currencies on the market, took advantage of that and didn't skip a bear. She tweeted, "While the US banking system was seizing up in response to bank runs threatening regional banks, Bitcoin, Ethereum, and other crypto networks didn't skip a beat. Instability in the banking system threatened stablecoins, the on-ramps to DeFi, in stark contrast to regulator rhetoric. Bitcoin indeed reached an impressive local peak, exceeding the $26,000 level for a short moment, rising over 17%. It was followed by a 5% drop. The Ethereum price also surged 20.26%, hitting $1,776, but now is down to the $1,689 level. However, Kathy wouldn't mention the instability in the banking system as 3 major and crypto-friendly banks went down, and 2 of them bailed out, producing a threat to the USDC stablecoin. It also affected TUSD, BUSD, and USDP. At the beginning of the crisis, the SEC regulators sued Kraken and Gemini exchanges for their crypto lending service, and the New York Attorney General filed a lawsuit against KuCoin Exchange, claiming that Ethereum is a security. Now, instead of attacking those decentralized, transparent, and well-functioning financial platforms that have no central point of failure, Wood believes that the regulators should have dealt with the weak points in the traditional banking system. Woods also noted that the vivid signs of a crisis were similar to the crisis in the 1920s. She was probably referring to the Great Depression that hit the US in 1929. Twitter boss Elon Musk commented that the situation with banks was now very similar to that of back in the Great Depression. "A lot of your current year's similarities to 1929, he said. The bank Woods was referring to are Silvergate, Silicon Valley Bank, and Signature Bank. All 3 of them cooperated with crypto companies like exchanges. Signature Bank also worked with Paxos, the issuer of BUSD and USDP stablecoin. Meanwhile, Ripple CEO Brad Garlinghouse also made a statement on Twitter to say that the company had little exposure to Signature Bank. However, the failure of the latter will not affect Ripple's daily transactions." According to reports, a prominent investor and writer, Robert Kiyosaki, predicted the collapse of Signature Bank, explaining that 2 major banks have crashed and the third one is ready to follow in its footsteps, even though he did not specify what bank that would be. Investors are nervous and they are looking for some kind of assurance that everything is going to be okay. But let's look at the bright side. Things are more different in crypto now than in its early days. The transparency, safety, and trustworthiness were intact. Things took a different turn when bad actors began to invade the system. To purge these bad actors, we need to embrace a lot of the regulations, regardless of how painful it might be. Right now, cryptocurrencies are in desperate need of some responsibility and structure. When it comes to cryptocurrencies, we are dealing with a system plagued with little oversight and plenty of dubious players. If the crypto community desires to attract deep-pocketed institutional investors and remain stable at the same time, it is essential to work within a legal and regulatory framework that is more investment friendly. Proper regulators will allow institutional investors or others to confidently put funds into this sector. At the end of the day, it's all a process, so let's go ahead and do our best to get through it. But that's going to do it for today's video. Make sure you click on the subscribe notification buttons and we'll see you in the next video.